Okay, good evening, everyone. Thank you for being here. It's great to see every one of you here. So my name is Jay Wu. I'm the founder of White Pagoda Group. And here we also have Jonathan Wei from Greystone Capital Group. And we're so excited to bring you a multifamily investment opportunity based in Dallas. The project is called McNeil Star Apartments. Before I start to dive into the specifics, I have a request to make. So if you have any questions, which I do think you will have, please hold it until the end of the webinar. We will address those towards the end of the presentation. Okay. Then disclaimer. So this is a 506B offering by SEC filing. So basically what it says that all the investors will have a pre-existing relationship with the sponsor, either with Jonathan or with me. All the offering details would be included in the private placement memorandum, which has already been posted on Cashflow Portal, which is the place where you actually commit your investment. So the link for the Cashflow Portal will be shown towards the end of the webinar. And all the numbers are forecasts and projections, and they're subject to change for different market conditions. And the actual performance may differ based on factors outside our control. All right, so let's go into the agenda. So I will first start sharing with you about the executive summary and make a little bit intro about myself, and then turn the torch to Jonathan, who is going to make an intro for himself. And he will bring you the sharing for the market and the location for this property. And then we'll take over to talk about the property itself and dive into the business plan a little bit. And we will examine we will do a comparable analysis together by looking at the rental and sales comps. And finally, we'll look at a financial analysis and specifically emphasize on looking at the return. Okay, last but not least, we will look at acquisition timeline and discuss about next steps for investment. All right, executive summary. So again, this is a 32 value-add multifamily community located in a fast-growing area in Dallas. So it's a Class B property in a C+ neighborhood. So we plan to hold asset for 3 to 5 years with multiple exit strategy. So we could either hold it for 3 years and refinance in year number 3, get all proceeds back and hold for a longer term, or we would be able to sell at year 3. Okay, so investors will receive 70% of the equity, and based on our pro forma analysis, we expect the average annual return of 24% and average cash on cash of 7%. And there will be a 3% acquisition fee and 1.5% asset management fee. We will provide monthly updates and quarterly distributions. And the first distribution will go out beginning the month after the second quarter is closed. All right, some investment highlights that I want to share with you guys. One is that the property is located in a fast-growing area in Dallas with major employment and job growth. Secondly, we got the property off market with no competition because we have a great relationship with the broker. Number 3, we acquired the property at $62K per door, which is significantly lower than the $97K per door market. Current rents are significantly low below market as well, by an average of $313. So aside from rents, the current owner does not really charge anything at all, which means that there is going to be a great value add opportunity for us. We would be able to implement RUBS, the pet fees, the laundromat, the parking fees, the tech package, etc. And also, there are 2 storage units that are not really generating any income right now. So we can easily turn the 2 storage units into rental units to increase our net operating income. And the current occupancy is 97%, and we expect the cash to flow in from day 1. All right, and then we can talk a little bit about ourselves as the management team. So again, my name is Jay Wu, and my background is engineering. So I have several years of experience of working in the tech industry in Silicon Valley before I started a talent acquisition business. So just a few years ago, I started to move from Bay Area to Dallas to pursue my commercial real estate journey. So for this property, I will be the lead sponsor and be overseeing the operation of the property. With that, I'd like to turn this over to Jonathan to talk about his intro and then showing a little bit about the market and where this property is located at. Okay, Jonathan.
Great, thank you everyone. Thanks for joining this webinar. We're really excited about this property. It's only 30 minutes from our house. We live in the same town in Allen, Texas, and this property is 30 minutes away. And the owner is a lovely couple who looks like the elderly, want to retire. And just a little bit of my background, I've been doing taxes for over 2 decades. I decided to leave my job and follow my passion. And my passion I found was real estate. So I created Greystone Capital Group in 2018, and I focused on multifamily and self-storage facilities. I created a 100 million portfolio and over 2,300 units, and I went 4 full cycles, which done very well. So I'm a mentor. I have my own mastermind community, and I'm a podcast host of Building Wealth Through Commercial Real Estate. Okay, we'll talk about the market. So the market is Dallas, Texas. And if you've ever been to Dallas, this is a great place, a lot of growth here. We just in our own town alone, we're having another Costco, another supermarket. So a lot of growth here, a lot of jobs. So in this market, you're gonna see significant growth from California, from Michigan, from Louisiana, from the East Coast. So this is like a hub that is driving the engine of America. So we have like Toyotas here. We have Liberty Mutual built the one in Plano. We have numerous corporate headquarters, like American Airlines is here, Lockheed Martin, Raytheon. There was a brand new Grandscape venue that created by Warren Buffett. He owns the land. So there's the Nebraska furniture. So it's very large economic development here in Dallas. So we like this market a lot. We live in this town, so we know this market very well. Okay, go next one. So a lot of Dallas major employers, like I said before, we have AT&T, which is here. We have Bank of America, UPS, Chase, Lockheed Martin, a competitor north of Grumman, and very large institutions that provide a lot of growth, especially rent growth and population growth in this area. Okay, next one. Okay. So as you can see, we have ranked #1 in business climate rank. We are very large in multifamily. We have many multifamilies in Dallas that we look to build our portfolio here in Dallas. And we have a lot of residents coming in, so we know that there's a lot of tremendous upside for us in growth and in demand in Dallas because people are always moving in for jobs. They're looking for opportunities, and Dallas is a place where we can provide different kind of jobs as well. Okay, next one. So just a little bit about Dallas. This is in near the South Dallas area, which is very close to the downtown Dallas. And you're gonna have the Central Business District, which is effectively the heart of Dallas, which you're gonna have like major companies, banks, kind of like the Wall Street of Dallas. And then you're gonna have the Arts District. There's a museum. Central Park is right next to it. They call it Kyle Park. You have the Main Street area where there's luxury shopping and sort of still Fifth Avenue of Dallas. And Deep Ellum is kind of like the village, kind of like a very hip area and trendy area. And we're West End District, kind of high-end area. Uptown is a nice location to live and walk, very upscale. And Victoria Park's in a lovely area in Dallas that people live and work in here. So this is where you can have Big Four like Ernst & Young, and I see a lot of PwC around that area as well. So this is kind of Dallas, and this is around 15 minutes away, 20 minutes away driving by highway to the facility where the McNeil Star is located. Okay, this is the demographic. As you know, we're growing by the day, every single day. We have 2.1 million people, over 100 employed within 20 minutes. You have major employers from medical centers, so UT Southwestern, Texas Instruments is building a brand new facility up in North Texas where we live in Sherman. So we're gonna have another major plant coming with Texas Instrument. That's a very large expansion. Baylor University is a very big facility here. It's kind of like Johnson Johnson in the East Coast. We have Baylor University in Waco. We have Baylor University here in Dallas and across the nation. So it's a very large healthcare system. AT&T, as you know, is mobile. Texas, another healthcare. Texas TXU is a utility company. So we have so many great companies here wants to come to Dallas, wants to come to Texas because really for us, we have no income tax for personal income taxes. And then the governor and the city try to give incentives to lower the taxes for them coming into the state. So this is why it's a great area to be in. Okay, next. So this is the location, and like I said before, this is maybe a 15-minute highway drive to the downtown Dallas. So if you look at the gold little icon, the little circle, that's where it's located. It's well maintained by the owners. Like I said, a little lovely couple. They're kind of elderly, they want to just retire. And you drive 15 minutes away, you're in the downtown city. You buy a very exclusive area, University Park. That's where like Mark Cuban and the George Bush, this kind of area. So you're in a very good area, grown area. That's gonna be growing over the years. Okay, next one. Okay, Jay, back to you.
Okay, thank you, Jonathan, for introduction of the market. That's very good. Okay, I will take over and talk about the property itself. As Jonathan mentioned, so this property is owned by an old couple who actually owned the property for 27 years. So when we got to know this property, and they are asking just for $65K per door. Okay, and we got it at 60, and we negotiated a little bit, and we purchased the property at $2 million, which means it's $62K and $500 per unit. And ask any broker that you know in the DFW area, and I'm pretty sure they will tell you this is the lowest price they haven't really seen, in the past 5 years. Okay, so we can certainly make a bet on that. So that's why we're really, really excited about the purchase price for this property. And usually when you say, hey, I bought it like cheap, the property looks bad, right? But no, look at a property. I mean, if you look at a picture on this slide, and this is the picture that we took about a few weeks back, and it's actually well maintained. Look at it. So the property was built back in 1985. It has 32 units spanning two buildings. Each building will have 2 stories. The electricity is copper wired, and all electric panels and breakers has been replaced back in 2018. It is individual meter, meaning that tenants are going to pay 100% of the electricity. So we don't need to pay anything for the electricity bills, right? There's no gas on the property, and the plumbing is PVC sewer lines. Also very modern, basically. So that's a very high level introduction about the property when you look at the numbers and the quality and these, and then we can look at a unit mix, okay? So there are 3 types of units at the property. We have 1B1Bs, A1 and A2, and we have 2B2Bs, B1. So the difference between A1 and A2 is that A1 does not really have the washer and dryer connections. It doesn't have a dining room either. A2s have both. Okay, so that's the only difference. Of course, the size differ a little bit as well. But the main thing I want to encourage you to look at is really the in-place rents versus the market rents. Okay, so if you look at a picture at the bottom right, you can see there is a significant delta between the two. Okay, so that's what we have advertised, right? So there was literally a $313 difference when it comes to the average rents for this property in this neighborhood. So that's a really, really big delta. All right, and there are some property photos that I want to show you. As you can see, all these pictures were taken a few weeks back. So they look really good, right? So the business plan, I'm going to talk a little bit about business plan when we take over. So within the 3 months that we take over this property, we're going to do some light renovations because if you go into the units, and we expect every single unit, to be honest, there aren't any major items being found out. So it's well managed by the owners. So if you look at the renovations, both exterior and interior, I mean, they're under a lot of like major repairs at all, okay? And then we also have a CapEx table here, which shows the capital expenditure that needs to go in for these renovations. We got this budget from our PM company. So we hired a local property management company called Golden Group Multifamily. And they have very local and they have nearby properties to manage. So we can leverage their resources to help manage this property as well. So you can see they're under a lot of budget that needs to go in for renovation. So, I mean, we're still conservative, okay? One of the biggest expenditure is the HVAC, and we're doing some, we're actually getting some rebates from the city when we're trying to replace the HVAC. So the numbers would not be as significantly high as what we see here, all right? In the next few slides, I'm going to show you what it will look like before and after renovations, all right? So this one is really the pre-renovation pictures for the kitchen and the post-renovation pictures of the kitchen. As you can see, we're going to replace the white appliances with black ones. We'll change the flooring and change some fixtures and the countertops, okay? This is really for the bathroom, okay? We're going to just make it better so that we would be able to raise the rents to market. But I mean, if you look at all the pictures on the left, they are literally the pictures we took from the current property. So you see it's not bad, right? This is actually the bathroom picture that we took from one of the storage units. It's very good. Okay, again, again, we talk about like 2 storage units being vacant, right? So as you can see, this is the storage units, just a picture for the storage. We can easily convert them into a livable rental property within 2 weeks when we take over. So that means we would be able to free them up for additional cash flow. Okay. The next thing we wanted to talk about is the water conservation program. So what that is basically to replace the plumbing fixtures like the toilets, like the shower heads, to make the water usage more efficient. So we got this quote from one of our partner called SAS. So they are one of the water conservation companies for multifamily. So what this quote says is that by investing 12 grand into this project for replacing all these plumbing fixtures, we will be able to save annually for water bills about 7,000, and we would be able to increase the value of the property by 100 grand. Okay, easy. And then cost segregation. This is a little bit more complicated concept. I will turn this back to Jonathan to discuss particularly about this tax study, okay?
Oh, okay. Okay, great. Wonderful, Jay. Thank you. People who rest with me understand cost segregation, but people who are new, I can explain this to you. Cost segregation we use Madison Specs, which is an engineering firm and a CPA firm combined. What it does is that it goes into the multifamily and it dissects, layer by layer and unit by unit, how many is leasehold improvement. Normally there's a table in the IRS. This is 39 years. It's a appreciable life. Furniture and fixture 7 years. Computer and equipment is like 5 years, and then 3 years software. So what it does is that it goes into every single unit. It produces an engineering report and breaks out every single item from furniture and fixture, leasehold improvement, computer, desk, and the bedrooms and everything else. Then what it does, they have an in-house CPA firm that will do the study for us and say, you know what, if you do a cost segregation, you effectively can take these costs, so instead of 5 years or 39 years or 15 years, you can accelerate to year 1, almost like a bonus depreciation, and elect that expense in year 1. And what it does, that creates a very larger loss, paper loss for tax, which we can pass on to our investors to take advantage of the accelerated depreciation on the cost segregation study. And it will pass through you and into the K1 at the end of the year, and you'll see a loss overall because we did the study on purpose to get a loss to get that tax depreciation write-off. And that's what the study is for, basically. Okay.
Okay, cool. Thank you very much, Jonathan. I know that you could definitely do a better job than me in terms of explaining all these like tax related matters. All right, let's look at some comparable analysis. So first, let's look at a rent comps. So as you can see, the top line and the bottom line are the subject property, right? So as you can see, if we compare the rents with the nearby properties within a 1 mile radius, the current property is significantly lower when it comes to rents, right? So that's why at the very bottom line, that's our estimates when it comes to the rentals, right? So again, I mean, they are still very conservative numbers when we're talking about the rents here, okay? And of course, I did the study just by going onto website like apartments.com or just call the property, got all these numbers. I mean, feel free to call these numbers, if call their numbers, trying to get their, rents if you want to validate the numbers. All right. The next thing I want to talk about is the sales comps within the 5 years. So this report, this report is from CoStar / Yardi. So basically, we got the sales comps within the 5 miles for the past 5 years, and there aren't a lot of like the comps when it comes to sales. But as you can see, okay, the average sale price per unit is 97 grand. Remember our purchase value? It was about like 62K. Okay, so it's a 35% um, uh, discount. Okay, that's a big discount if you think about it. All right, let's dive into the financial information a little bit. Acquisition summary. Okay, I'm not going to go through every single item here. You would be able to read it off the table. The only thing that I want to mention is the debt. So we were able to get agency loan from Freddie. So the agency loan is Freddie SBL. So the leverage is about 60%. So 60% debt, 40% equity. The interest rate is 5.99 with 1 year interest only. Okay. So that's that. And then we would be able to move to our financial projections. Again, we're going to project the income expenses for the future 5 years. And, and again, if you look at all these like assumptions, they're very conservative, right? I mean, if you look at any underwriting, you probably would not be able to underwrite the first year 50% vacancy and 50% concession. So we're very conservative. That's why, I mean, it's a really good deal to invest in. The last thing I wanted to show you on this slide is the cash flow available for distribution. Okay, so this is the amount available for distribution for our investors. Okay. And then investment returns. Okay, so based on the projections that we listed earlier on our slide, so for members who invest in 50K, they're going to get 50K back at year number 5. In addition to that, they're going to get 61K in return. So if we're talking about multiples, that's about like 2.22%, 2.22 multiple. The average annual return is about 24%, IRR 19%, annual and average cash on cash 7.4%. Okay, so if you're investing more, like 100 grand, the returns are going to be the same, but the numbers are going to differ. All right. So that's that. The next thing I'm going to talk about is really acquisition timeline. So we got the property under contract on June the 14th, and we completed our due diligence on July the 10th. So today is the webinar, and we're available to launch the deal tomorrow. So we're still waiting on the bank to open the account for us. So I think it's going to be available tomorrow for investment. All right. The target closing date is August 30th. Okay. Next steps. The action items. So you can see 2 barcodes from here. As I said, 506. So 506B offerings are the regulation says that the investors have to have a pre-existing relationship with the sponsors. So for people who know me, you can invest through the first barcode, the White Pagoda. For people who knows Jonathan, you basically scan the barcode for Greystone. Okay, so it will bring you to a cash flow portal where you would be able to commit your investments. There's a note, okay, space is limited. Your participation is only guaranteed after you have signed the legal documents and the funds have been wired into the account. And this is a first come, first serve type of investment. Once the deal is fully subscribed, you cannot accept additional funds. We will notify you once it is full and you can be added to our waiting list. Again, for any questions, you can contact me or Jonathan. So that's pretty much it. Any questions? So we're open the floor up for questions. Nobody? All right.
I have a question. I have a question.
Sure.
So, you guys talk about renovations. When you're renovating, where are the tenants going to live when you're doing
So the renovations will only be conducted after they move out. So it's going to be an ongoing, type of.
Oh, got it.
Yeah, but you are talking about interior, right? Exterior, of course.
No, interior. Talking about the interior.
Yeah, okay. Yeah, for the exterior, yeah, we will start renovation after we take over.
Okay, thank you.
Okay, any more questions? All right.
Yeah, Jay, I got one. You got the exterior renovation roof repair at 500. What's that?
So the roof is actually in good condition. I think I just showed in the slide, the roof was replaced back in 2017. So, I mean, I think the 500 is just for the deductible in case there is a problem. So I think we bought insurance. Their insurance only requires about $500 as deductible for repair. That's why we reserve this amount.
Okay, I was just curious. Thank you.
Yeah.
The HVAC, we had 13 units that need to be fixed.
Well, all the HVACs right now are pretty old. The seller is really kind. They actually gave us 19 units for free because the seller is a HVAC technician. So, there was 2 storage units, remember? So in one of the storage units, he has the 19 new HVAC systems in that unit. So they're going to give this for free. So that's why we only need to replace 13 units when it comes to.
I mean, are they window unit or are they like a central air unit?
Say it again.
I mean, like central air conditioner.
Central air condition. Yeah.
Okay.
And then what we did not factor in, and we're being very conservative, is that we're getting a grant from the OnCo, which is a local utility provider. They can give us up to half or more than the money in that 92,000, but we didn't factor it in. We're being conservative, basically.
Yeah.
Okay. That's good.
Yeah. Because they want to, in Texas, we have a utility grid issue. So they want to save the utility grid. So they want to provide you free grants to replace new energy efficient systems. And that's what they gave it to us.
Do you have, in the parking lot, do you have enough space to add Tesla charging? Like rent the space to Tesla?
Good question.
We haven't looked at that, but we'll see about that one. Yeah.
Okay.
Okay, any more questions?
What's the total raise again, Jay?
1.3.
1.3. Okay.
Yeah, so this is an incredible deal, incredible low basis. You can't find the spaces anywhere in Dallas. Normally Dallas is 90, 97, 100, $120 a door. Because we've been looking over the past year, and this is a deal that I've seen that's very, very good deal. And the owner is very, very kind. So
yeah. I love the silence. You're so good.
Yes, very kind. So I think this is a great deal.
Okay, so if we don't have questions, we will wrap up here, and we will send over the webinar through emails later. So if you want to watch the webinar, you're always available to watch it online in another date. All right, thank you very much, and have a really good evening.
Good evening.
Okay, thank you.
Bye.
Bye-bye.
Bye-bye.